Hello and welcome to Bloomberg. You're watching IPO Adda, and my company today in focus is CMS Infosystem, which is India's largest cash management services company. And joining me is Rajiv Kaul, who is the Vice Chairman, MD and CEO, and Pankaj Khandelwal, President and CFO of the company. The company is coming out with an IPO of 1100 crores, which is primarily offer for sale. The IPO opens on 21st and on 23rd of December, price between 205 to 216 per share. The company value of over 3,196 crores at the upper end of the plan. Joining me, Rajiv and Pankaj. Welcome to Bloomberg Quint. Rajiv, to begin with, you are in a very in an industry which is consolidating at a fast rate. But at the same time, you have headwinds coming from the digital transactions that are picking up at an even faster rate. How do you see the business moving forward from here?
Sajid, thank you for having us first. And I will first talk about your point on consolidation. I think a strong platform company in any part of the world, any country in the world, whether it's in digital or infrastructure, I think will continue to consolidate because economies of scale, quality, all of those things come to their advantage. Unit cost economics improve dramatically. And therefore, whether you are a digital or a non-digital company, a strong platform company will continue to do well and thrive in current volatile worlds. Coming to your second point about the whole digital transactions, I think I want to set the stage here a little bit and explain what are we about. What we do is we help banking customers, BFSI customers serve the consumer better. And that we built a platform first around the cash management cycle, wherein the entire cash cycle from the cash logistics to an ATM replenishment to a retail cash pickup and processing and currency just optimizations, we cover the entire gamut of that. Now, a lot of this work is still done in-house by the banks. And there is a massive opportunity for the next 10 years for this to get outsourced to high-quality players who can do it at a better quality, lower cost, and therefore banks will benefit from that. Around the cash management cycle, there is a lot of technology. You go to an ATM, for you and me, we go to an ATM, withdraw the cash, we don't look around, but where to install the ATM, at what level and of efficiency it runs at, what are the remote monitoring around it, what are the software, what are the marketing at the ATM side. So a lot of technology and tech goes behind cash as we think of it, and we know it's not obvious to the Indian consumer. And we are very good at it, we're very strong at it. So we are in the entire value chain of an integrated offering, right from logistics of cash to the technology of cash. Around that, we see massive opportunities of growth. As India formalizes from a more informal economy to a more formal economy, as you see more organized retail, you see more e-commerce transactions. A lot of e-commerce transactions today in India is on cash, is cash and delivery. And therefore, we see a brilliant opportunity for the next 10, 20 years that as India and the government looks at formalizing the economy, creating better economic growth, companies like us will be a vital cog in achieving that goal and also benefiting from that growth.
I know, Rajiv, how are you taking the expansion between two parts of the country, basically urban and semi-urban and rural? What we have seen is that beautiful consolidation and services being laid out for urban piece. But when it goes to penetration levels for semi-urban and rural, it's much lower. How do you manage that kind of penetration? Because that's not going at the same pace as urban penetration is going.
So, our network today is almost 62% of our network is semi-urban and rural. So I think we built distribution in this business way back in 2010. And I think that was one of the biggest reasons initially we started doing very well because we built the distribution when the work didn't exist. And we built it expecting economic growth in country to come in the areas we think. And I think we are benefiting from that entire cycle where the growth in semi-urban and rural for the broader country, not just us, is at a different pace than urban and metro. Having said that, India has many, many different parts and different components, and the penetration levels are different. You'll take a state like Tamil Nadu, where there are 35 ATMs plus per 100,000 per 1 lakh people, and then you go to, let's say, a UP or a Bihar or a West Bengal or Rajasthan, which are large states, where the penetration levels of an ATM would be 7 or 10 or 12 or 14. So I think there is a lot of opportunity for, again, I keep going back to the foundation. As an Indian consumer or Indian citizen grows in their affordability, their income, and their consumption, all boats, whether you are on a digital boat or a cash boat, will rise and grow. Relative basis, but they will go because digital is coming from a smaller base. Cash is coming from a higher base. Cash in circulation in India is right now 30 lakh crores. It's almost 14.5% of the GDP. And you need a very efficient network company like us to help you manage the working capital cycle, the velocity of cash, far, far more. So yes, I agree with you that the urban metro growth percentages may be little lower than the semi-urban rural, but I think for us, we are expanding in all of those. I think when I look at a network expansion, we are expanding in I would say all parts of India, whether it's a Delhi or a Mumbai to the northeast to J&K, we're expanding on all of those. We cover 15,000 pin codes of the country today.
So, what is the kind of expansion plan that you have over the next 3 to 4 years?
So, from a network perspective, we today have 238 branches. We cover 15,000 pin codes. We are present in 97.5% of India's districts. We are in every state other than maybe Lakshadweep, right? We are in every state right now. Obviously, in each state, we can go deeper with the penetration, right? But that will link to how we see volumes coming in. We've already put the network in. We run a logistics platform first, whether it is our vans or the engineers on the ground. And keeping it ahead, right? All of it should not be very profitable. You want to keep expanding in the future. So I think we've now got a run rate of every year increase and expanding our reach. Some years maybe 10%, some years maybe 20%, but that will be determined on where we see pockets of growth coming in and expansion coming, and linked also to the state's GDPs and how different states are doing. So we have gone from 0 to 238 branches over a period of time. I'm sure that will continue to grow as India grows.
So, your expansion is also linked to private sector and public sector, going for cash management services or managed services.
Yeah.
And you do tie-ups with them for 5 to 7 year period. So you should be having some kind of visibility of where you will be expanding in the next 3 to 5 years, because you will go where the banks want you to grow. It's not more of your choice, it's their choice how they want to reduce costs or increase penetration in certain areas. So do you have that kind of visibility of which are the areas which you have to cover in the next 5 to 7 years?
So Sajid, again, let me try and give you an answer. I know you're looking for a number, but it's very difficult to forecast a number.
Or a percentage of
No, so if you think of it, we are in every state today, right? Every state today, therefore, we have a presence. Depending for every bank, if they want any work from us, from managed services, ATM remote monitoring, or you want in cash logistics, we have a branch and a hub. So there are many hubs. When I talk about 238 branches, we will have more than 1,000 hubs in the country, maybe 2,000 hubs in the country. Those hubs, as the volume of work improves and increases to a threshold we determine, they convert into branches. Then you have a more bigger, larger infrastructure. So don't think 238 branches all we have. We have many, many hubs in the country. You run a logistics network. And a lot of, for us, I think we've got the presence we need in the country. Now it is a matter of the volume of activities as they grow. Many hubs over time will convert into branches. So I think that's the way we will run a network. And I'm sure we'll keep adding more hubs as we find opportunities to create more hubs. But I think we've got a fairly strong network today, which is taking care of the bank's needs, which we have. Because the banks are the same, right? We work with all the banks. We're working with them. Now, if a bank wants tomorrow to open a branch or ATM in another new remote location, we may be able to handle it from a current hub. But if they open 8 or 10 points, whether it's retail points or ATM points, then we'll create a hub there first, right? And then a larger hub will become a branch. That's the sort of logical evolution of this.
Mm-hmm. So, Pankaj, so how is the metrics? How does the metric work in that sense? What kind of cost and capex requirements would be there for you in that sense? If suddenly you have to, as Kapil pointed out, you may be able to cater to one point, but if it's more than 5, 10, or 15 points which comes in and you're required to set up convert it to a branch or create a new branch itself, what kind of cost structures are there for you?
So we are, as Rajiv said, that we are regularly increasing our base. We right now have 1,500 hubs, and based on the requirement of the business, we convert in the branches. So that it's in the logistic play, everything is on density. So once the density increases, our profitability increases, and based on that, we decide to convert in the branches or convert new hubs or having the more routes, etc.
We've added 14 branches in the last 5 months. In this 5 months, we added 14 branches. So just take that example and just you can extrapolate that. 14 on a base of 220, 224 is 238. And if things grow at that pace, the way we are growing, we will have to keep increasing our branches.
And we have a multiple business now, like in managed services. In the managed services business, we started in 5-6 years back. So managed services add on these type of branches wherein we have infrastructure is basically shared with both the businesses, and we get a lot of synergies. And in the managed services space, we are adding new businesses like software. Initially, it was only banking automation products. Then we have gone to the software, the BLAs, the remote monitoring. The large order we got in last 15 months, around 2,000 crore on the managed services, will help us to increase our infrastructure.
I've been seeing the trend of your revenue contribution. The cash management services revenue contribution is 60%, but it has gradually fallen in over the last 3 to 4 years, which is there. And while the managed services contribution has gone up in that sense, how do you see the mix of both cash and managed services going forward? Do you see as more digitization happens, cash management services will come down, but it will still be a significant portion, but still come down, and managed services is something which how the entire banking system will move forward?
So, Sajid, there was a little bit of disturbance in the quality of the video, but I think I got your question. Our cash management business was 100% of what we did till, let's say, 2013, 14, or whatever it was. And then we started the managed services business. So logically, the share or proportion of the business will reduce because we got a new business. Now we started a remote monitoring business. Remote monitoring business will start going up, and the other two businesses' share will go down logically on a mathematical basis. We are looking at a very strong growth potential in all our 3 business lines. Obviously, the smaller businesses in size will grow faster. That's why we have entered those businesses, because we think there is a massive opportunity to grow. That's why we are getting those businesses, and on a smaller base, the growth numbers should be higher. But having said that, we expect if you look at the TAM, the total addressable market of what CMS is working on today, the industries we operate in, it's roughly an 8,000 crore, 9,000 crore business, which is expanding to a 21,000 crore market in the next 5 to 6 years. You look at the CAGR, I think that's a CAGR of about 16-17% of the market. Now, if we retain a market share, we should aspire to grow at that level. If we grow higher market share, we should aspire to grow at higher than that. And I think it'll be difficult to say that which business will be what proportion, because all of our business units and the people running it are incentivized and motivated to build their businesses strong. And I think you will see all of them growing at very healthy levels.
Pankaj, what about the margin levels? You are at 23-24% currently on a blended rate. How are these businesses giving you? What kind of margins are these businesses giving you, especially the newer ones like managed services and the remote managed services which you have started?
So if you refer to our segment results and calculate the EBITDA, so both our business are almost similar margin profile, EBITDA margin profile.
Okay. And you...
And we in the for the managed services business, we got around 2,000 crore rupees of the order book, and once these are executed, we expect that the similar margin or better margin will be maintained.
But if you look at our overall company, right, our overall company, the margin profile at an adjusted EBITDA level was 19.2% in FY20. It increased to 23.4% in FY21. If you then look at the updated RHP data, for the first 5 months of the year, our adjusted EBITDA level is at 24.1% versus 23.4% in FY21. So you can see a systematic expansion of margins, which we hope will continue as we continue to grow much higher in our revenue and also the type of quality of services we are offering. Because as I again want to reiterate, we do everything from logistics, which is a very important and fast-growing sector, to the software and remote monitoring, which are very technology-oriented sectors.
Mm-hmm. And do you think this margin levels are sustained, and what could be the kind of headroom that is available for you as an industry? Because you are one of the leading in the industry, and the industry is consolidating, so you will have a much better say of pushing prices across. So what could be the room that's available for the industry? I know you can't talk about your company, but from the industry point of view,
I think with the First of all, a strong platform company, right? Whichever company, you can go to a Google or you can go to wherever, you can come to CMS, has to first focus on making sure that you are offering the right quality to a customer, the right uptime, the right governance, the right risk management, and the right network and reach. You have to give a mix of things which is compelling for the customer to work with you. In a B2B business, that's very critical, and reputation management is also very important. Trust they have on you. So for us, I think what pricing the industry can do and all is sort of immaterial. I think there is a potential for all companies to do well. Better qualities companies with have a end-to-end offering get economies of scale. That economy of scale should lead to margin expansion. We look at margin expansion from two clear areas. We look at it from a revenue growth, if you are able to grow revenue higher than whatever cost you need to incur. The second comes from automating and integrating and sharing your network. Like Pankaj alluded to, we have a fairly common infrastructure, people, branches, technology, which support our different businesses. And as that shared cost if that shared cost can be split and shared by, let's say, another new line of service we start in logistics, if we can start something, we get better margins. So I think driving good revenue growth and leveraging our infrastructure for more line of work is our strategy to think about how we can build better unit cost economics and therefore higher margin.
Pankaj, you mentioned the fact that you have some 2,000 crores of order book of managed services. That's executable over what period of time?
So these are the BLA contracts or the remote monitoring coverage, which has come in 5 to 7 years. If you will refer to the RFPs of those banks, it is 5 to 7 years.
So I think the mean would be closer to 7 than 5 because some of the larger contracts are more 7, and each of these contracts and these cycles can be extended on the discretion of the bank further, right? As per these are mostly a lot of these are for the large public sector banks, so therefore there is a lot more visibility and they run into multi-year cycles.
Okay, so you have to see that our managed services business is around 364 crore rupees last year, and top of it, around 2,000 crore rupees of the order book will help us to improve in this business.
Okay, brown label ATMs you had entered into, but I saw in the RFP that you've gone slow on that business. Why is that?
Sorry, I don't know what you mean by slow. What are you
saying
referring to?
The growth has been slowed down in brown label businesses. That's what the RFP mentioned.
No, so I think what is in our brown label business, it's a very large market. It's a capital intensive business. What we are focused on is winning brown label business for us is linked to high quality transactions or high quality contracts. I don't think there is any slow growth in the brown label business. Our installed base is growing well. There may be a little slower execution of the one contracts because with the 4 months of COVID, there was delays in procuring all the supplies, getting the supply chains in place and installing and executing the contracts. I don't think there's any other slowdown, which is other than the fact that execution is taking a little more time because global supply chain cycles, procurement of chips, procurement of ATMs, all of that is running at a little delayed pace.
And you see that normalizing because chip issue has been a big issue for multiple industries, and especially for yours, it will be. When do you see that stabilizing?
So I think for us, if we again go back to, we had a big contract we won in brown label in FY21 from the State Bank of India, which you have shared. We have close to finished executing the contract. We have another contract from a large public sector bank, which we expect to finish execution in December or January of this year. So with that, we should be on stream. We should be with the contracts on. We should have finished execution of those contracts hopefully by January of 2022.
Pankaj, of the revenue that you get, what percentage comes from private sector and what percentage comes from public sector?
Say private sector contribute around. Give me 2 minutes. I'll just confirm to you.
Okay. We don't normally split it like that in our mind because
I'm trying to figure out whether the next growth is going to come from public sector or not.
I think the growth in my mind is a very strong potential for us in public sector only basis the simple fact that the private sector has outsourced over a long period of time. The public sector has been doing, some of the high quality banks have been outsourcing, others haven't been. Secondly, the whole PSU bank merger, a lot of plans got delayed and deferred for both refresh and expansion. We now see a very healthy, strong pipeline of business, which is there. And therefore, we think a lot of these contracts are becoming more end-to-end integrated instead of being piecemeal. And therefore, the size of deals is very large, which is also evidenced by the fact that the order book we won of 2,000 crores most of it is from the public sector banks.
One of the recent guidelines of Reserve Bank of India also talks about going for cassette swapping versus manual. Where are we on that vis-a-vis the entire network of ATMs that you have?
So, the whole goal from the RBI is to move all elements of the currency cycle and the cash cycle to a globally high quality standard. Cassette swap is one element of it. We can't disclose the exact number of how many ATMs in our network are on cassette swap, but is this something which the RBI is very focused on to achieve by in a very short period of time, so that the whole banking sector...
Will you be able to achieve that by March 2022? Because that's a new deadline.
I think the banks are working with the RBI on figuring out what is the best possible way. Again, the supply chain, the availability of so many cassettes for India and all is all going to be a challenge. And that's something which is something between the banks and RBI and not really for us to comment on.
So you're saying that you may not be able to meet it and there may be an extension on this deadline, is it?
So, no, we're not. We're saying the deadline is between RBI and the banks. The banks need to decide and be able to do it. As the banks tell us to do this, we will be ready to support them in cassette swap. But the banks and RBI, I assume, I'm not privy to those discussions, they will have to sort of determine the pace of what they can do. It is, yeah.
How in place when a bank moves out from a capex-based model to an OpEx-based model, which is by employing you as an outsourcing partner? What is the kind of savings that the bank gets in terms of their costs and other stuff?
I mean, this is, Sajid, a little broad question because every bank has different levels of expertise.
Yeah, but the private sector is almost saturated in that sense. They have a higher level of outsourcing. The public sector is something which will pick up. And that's what is going to happen going forward. So I'm trying to figure out how the industry dynamic is changing with respect to the OpEx model is concerned.
Sure. So I think when you think of outsourcing, there are different reasons to outsource. It's not only just cost, right? And there will be a cost saving because if you outsource it to somebody who's got a network, who's got scale, has got all the services, you will save on cost. That's a no-brainer. I think what is important here is for, again, the banks, this is first about maintaining the quality of the service to their customer, which is the consumer of the bank, which is a bank account holder. And that's where getting a technology company, getting a network company, getting a platform company helps because you are first focused on uptime. What is the uptime of the ATM? Can you improve the uptime so the customer benefits and doesn't have any complaints? And therefore, outsourcing this lock, stock, barrel is a recommended approach because the bank can focus on what is their core business and they take a technology platform like CMS and other companies to help them run this network, not only at a cheaper cost, but at a far higher quality.
What about the consolidation, Rajiv? Because if you look at the top two players, they account for roughly around 72% of the market. Do you see further consolidation happening? I know in global markets, it's maybe a duopoly or 2 or 3 players max, and in India, we have more than that. But do you see enough room for the top two to take further market share away from the smaller players?
Well, I can't comment on top two and other places. And I think again, I want to explain the fundamentals of the business, right? And that's first, logistics business, scale, network, reach, quality, all matters. You can't have one company or two companies. But we have seen in this globally, because this is also a risk management business, right? It's not just logistics, there is risk management. Therefore, having very strong quality, very strong investments which go in every year to maintain that quality is very critical. It's not easy for companies to do this, every company to do it. And we've seen that happen. Many companies have tried to enter it, but they're not able to scale the network. The cost of the network expansion, they can't absorb, or the risk management guidelines which you need, they're not able to absorb. So we've seen market share shifting to the higher quality players. Again, it'll be quality. If you can give quality and reach, every customer will work with you. And that's the same for even when you and I, as consumers of a telecom service, we will gravitate to the company which can give me a cell phone connection and give me the data speed I need to work. Similarly, in our business, people will gravitate to a company which can give you the quality of service, the availability of the service across the country, and at an attractive price.
Pankaj, one question on the cost factor, which is here. How do you do the pricing negotiations? Does it happen on an annual basis, especially for a cash management business, which would be dependent on a lot of external factors like fuel costs and manpower costs, etc., which is there? Do you do it, or is it a fixed tenure, a contract that you have? And how do you manage the escalations that happens if that is so?
So most of the cash management business are on the we negotiate on the yearly basis with the customers, and with the help of the productivity and the technology, we was able to improve our productivity. Will help us to reduce our costs.
Are you able to pass on the cost? That's what I'm asking.
I think it's, so Sajid, it's obviously linked to what is the market dynamic. Do you want to pass on the cost? Are you able to? It's true for any company. A consumer company will have a cost inflation. They may not always pass it on. So it's not a straight cut. Every time a cost goes up, you go pass it on. I think it's linked to what are the market cycle, what are the industry cycle, what is your goal at that time. But to your question, let me simplify the answer. We are an annuity business. There is a discussion on everything, service levels, quality, business, volumes every year. And based on the composite thing, you take a call at that time, what is your priority of the management team and what is the need of the business at that time?
Mm-hmm. Finally, Pankaj, you have mentioned you have achieved around 24% of EBITDA level. Is that good level to be there? Is that or do you have an aspirational EBITDA level, which many companies talk about? Do you have an aspirational EBITDA level as well to reach?
See, as Rajiv explained that in the first 5 months of this year, we improved our EBITDA level by 0.7%, 70 basis points. And the business, what we are like managed services business, we have a 364 crore rupees of the revenue last year, and we have 2,000 crore rupees order book. In the cash management business, we discuss about the currency, the cassette swap, and the regulatory tailwind where the price increase will follow on, which should help us, the industry, to improve the margins. With the help of the technology over in the past several years and the multiple technology platform, the synergies, acquisition we have done, which should result in the higher EBITDA margin going forward.
Gentlemen, it's been a pleasure talking to you today. The CMS Infosystem IPO, which opens on December 21st and closes on 23rd, is priced between 205 to 216. The offer's portion 1,100 crores, and the company is diluting 34.4% equity, and the market value would be around 3,200 crores at the upper end of the price range. Thank you for joining us on Bloomberg.
Thank you, Sajid. Thank you for your time and having us on your channel.
Thank you.
Thank you. All the best, sir.